where from there as we enter earnings season. Manishi Raychaudhuri of BNP Paribas with us. Morning Manishi, Happy New Year to you. Are you getting a little apprehensive at the ease with which the market is moving up, or you remain confident that we can scale even higher levels by the time the budget is out?
Well, the budget is out in just about 2 months or so, even less than that now. I think, if you look at the medium-term perspective on this market, there are two things to look at. Number one, whether the earnings growth momentum would continue, and secondly, whether the valuations are sustainable at these levels or not. Because India at this point in time is approximately about 20% higher than the Asian average in terms of P multiples. India is possibly trading at about 17.5 to 17.6, while Asia ex-Japan would be at around 14 times. So for those valuation premiums to sustain, I think Indian earnings growth would have to be significantly higher than their Asian peers. Now, having said this, I must also point out that earnings growth in fiscal 11 is actually likely to be significantly higher than what we have seen in the few years. In fact, in fiscal 9 and fiscal 10, we have seen a virtual earnings holiday, as some commentators have called it. It's almost flat earnings growth for 2 years. And when we go back to that normal level of 15 to 20%, the initial years are likely to have significantly higher growth than that. So for fiscal 11, our forecast is somewhere in the late 20s, somewhere around 28 to 29%. And I think the first signs of that would be visible in this quarter's earnings season itself. So by the time we're in January, we would actually begin to see that earnings growth is coming back very strongly. So for example, our own BNP universe, we are forecasting about 23% earnings growth this quarter. And that is in contrast to the 4 quarters of earnings decline that we have seen in the past year. The other important point to note is that this earnings growth is actually predicated, it's based on top line growth, or revenue growth coming back very strongly. So 23% earnings growth is actually driven by about 20% revenue growth for the BNP universe. And that's actually a departure from the last 2 or 3 quarters where companies were squeezing their cost and extracting higher margins out of the operation. But I think that's not really a very sustainable phenomenon. What we are going to see now is percolation of economic growth into corporate top line. And that, I think, is a lot more sustainable. So, I think it's all likely to be a combination of this. Now, if I were to give our full year view, that is by end of 2010, we see the Sensex at somewhere around 21,000, which is somewhere around 20% up from here. Whether that would be achieved around the middle of the year, I don't know at this point in time. But we are fairly confident that given the strong earnings growth projection that we have, even without significant re-rating from the present levels, the market can scale somewhere close to what we had seen in late 2007 or early 2008.
Manishi, morning. In your interaction with overseas clients, though, are you getting the sense that money flows for the market are opening up significantly and this 21,000 target could be perhaps overreached?
This year, in calendar year 2010, as far as our regional outlook is concerned, in Asia ex-Japan, we are seeing somewhere close to $25 billion of inflow, which compares to last year's inflow of about $27 to $28 billion. So it's almost flat compared to last year. Our house view is that in the first half of the year, the flows could be slightly muted because there is a possibility of relatively stronger growth in US and Western Europe, which could limit the flows into Asia ex-Japan. Now, having said that, there are certain important catalysts as far as India is concerned. Here, one of the most important catalysts to fund flows historically have been how the currency has behaved. And we think that the rupee is likely to appreciate. In fact, our view is that the rupee would appreciate to somewhere around 44 by March and about 42 by December 2010. If that is indeed the case, then I think a repeat of last year, which is about $16 to $17 billion of FII flows, would not be too much, I mean, it can easily be repeated once again. The other thing I must point out is that last year the domestic mutual funds were actually net sellers in the market. I think that could reverse this year. And if we do have a positive contribution from the domestic mutual fund side, that can easily take the market significantly higher.
What about the hot space, Manishi, which is those newly listed power generation companies? Where do you stand at BNP Paribas on valuations there?
See, in general, if you look at the IPOs and more specifically for the power IPOs as well, I think the valuations at which these IPOs came left very little for the secondary market investor. And so many of these IPOs came at somewhere around 2.5 to 3 times price to book multiple, which left very little on the table for the investor, and that is why I think there was a relatively muted response to some of these IPOs. Now, having said that, I think if we look at the sector as a whole, the extent of capacity addition that is coming through and the strength in merchant power that we're seeing, that is likely to take the sector higher, even though I think over the longer term there are certain concerns about sustainability of merchant power tariffs, because there are very large capacities that are coming up which would possibly lead to some kind of fulfilling of the excess demand that we have at this point in time. So I think that whole sector becomes even more attractive at slightly lower valuations than it's trading at currently.
If your end target or upside target is 21,000, Manishi, because of this earnings momentum you're talking about, what do you think the market will settle itself into a base with? I mean, is it the current levels we're trading at right now?
That's a difficult question to answer, Mithali, because it's currently trading at about 17.5 times, as I mentioned. Now, if you look at the last 15 years average, it is somewhere around 15 times. So, if the market does trace back to that, long-term average levels of P multiples, that's about 10 to 15% correction from here. And I don't think any fundamental analyst can rule that out. It can happen. A 10 to 15% correction from here means that we are talking about a downside limit of somewhere around 14,500 to 15,000 on the Sensex. Now, whether that would happen or if it happens when that kind of a level would be reached, I have no clue about. But, one can, there is one observation that one can make, that, apart from the broader market valuations, there are, if you look at the leading stocks in most of the frontline sectors, like infrastructure, like consumer discretionaries, like banks, they are possibly trading at or very close to full valuation levels. And that is what is making, stock selection very difficult in this market. And that's why we are seeing increasingly investors kind of gravitating towards the small and mid caps. And I think the valuation advantage really, at this point of time, the valuation advantage rests in that universe.